Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and I'm speaking today with John Rubino, runs the John Rubino newsletter over at Substack, and we will put a link to that down below. And John, it's going to be a fun episode today. We were talking off mic because we finally have gold above $2,100 in the U.S. markets, both on the spot and on the futures price. And this is kind of an interesting start to the week, leading off from a close on Friday that was the highest daily and weekly close for spot pricing and for the futures market at the same time. So everything was singing in harmony on the daily and the weekly to close up last week. There was a pretty nice response in some of the bigger precious metal stocks last Friday as well. But we're kicking off this week with even a higher price for gold. It's up around 21.24 right now at the time of this recording on the futures market. And a lot of the gold equities and silver equities are responding. I want to start with the gold price first. Is this finally the breakout we've been waiting for years, John?
Hey, Shad. Well, finally, we have a day where we can talk about good things instead of why isn't what's supposed to be happening. So, yeah, gold is rocking. And silver is up nicely too, although it's got a long way to go before you even start thinking about all-time highs with that metal. But gold is above 2100, and that's you can think of 2100 as minor resistance because 2000 was serious resistance. It broke through that. Now it's up in the 21s. So far, so good. There are lots of possible reasons for why it's happening now. So I'll hit the bullet points without necessarily implying that any one of these reasons is the single reason. But there's an interesting thing going on with the Shanghai Gold Exchange in China, where it's trading at a premium. Gold is trading at a premium there to what it trades at in Europe and the US, which means there's an arbitrage. You can buy gold in London, let's say, and then sell it in Shanghai and make money. And apparently a lot of that is happening. A lot of gold is flowing from west to east. And that's a process that may affect the price in the short run, but has some big long-term ramifications too. And and a related issue is that central banks are still buying. They're all of a sudden in the last few years became whales in the gold market. They're buying 1,000 tons a year the last 2 years, which is a huge amount in a market where that's 25 or so percent of the annual gold mine production. US inflation is running hotter than expected, especially that thing I'd never heard of before, the supercore services inflation measure is running at like 8% right now. So that means the Fed can't cut interest rates as quickly as it should have, but which should be bad for gold, but actually higher inflation might be good for gold. And then the US government, this just showed up in CNBC a couple of days ago. The US government debt is now rising by $1 trillion every 100 days. So we are in credit supercycle blow-off territory now, which of course would be excellent for gold, at least in theory. And a related issue, the US is set to issue $10 trillion of new treasury paper this year. Some of it is rolling over, some of it is paying for our big current deficits. And maybe the biggest one is that US is thinking about confiscating Russian reserves that they froze at the beginning of the Ukraine war. And now you got morons like Janet Yellen out there saying, well, why don't we just take that money and we'll divide it up and we'll give some to Ukraine and we'll spend, really stupid stuff. But that's the kind of thing that if it happens, nobody will want anything to do with, for instance, storing their foreign exchange reserves in European or US banks for sure. And it'll impact the dollar too. So anyhow, one of those things could be the dominant factor, or they could all be adding their weight to what is becoming a really positive environment for gold. But however, there's lots of reasons that now we can look back and say, oh, this had an effect and this had an effect. You add them all up and you get a very good environment for gold.
Yeah, John, it is really curious because there's a combination of factors from monetary policy, from people kind of sniffing out that there's maybe some more sickness under the surface in some of the foreign economies. There's also the geopolitical tensions that you're seeing. There's some of that information about Russia, like you mentioned, potentially confiscating their money, which would probably be a serious concern for other nations on the world stage as well. Do you think that we're seeing this buying coming in because of central banks? Because the last couple of years, we've seen gold well bid even while there was ETF outflows from the physical metals. Do you think it's people that are buying physical because they want the store of value? Or is this more of a technical breakout after gold's been hovering above 2000 for really 3 months and it just finally found the impetus to just burst up through this level?
I have no idea. There are so many reasons that good things could be happening in the gold market that I think it's impossible to pick one and say this is the reason. I think it's just suddenly a very good environment, both fundamentally and technically, for precious metals. Now, that doesn't mean that we don't get a brutal equities bear market that tips us into a recession sometime this year or next year, and that doesn't pull gold and silver back down. That could happen. But right now, with what's going on in the world, there are an awful lot of reasons for buying gold. And so lots of big players are apparently doing that right now.
Well, we should also make the point that it's not just gold. As you mentioned, silver is doing well, but also the precious metals equities, they seem to be doing well today. We were laughing off mic before this because we were going down a list of companies up 25%, 20%, 15%, 10% today. There's a ton of gold and silver, and it's all the way down to the juniors, all the way up to the larger producers. So what do you make of the response that we're seeing in sympathy with silver and the mining stocks this time?
Well, $2,100 gold is very positive for producers because it gives them wider margins. So, if gold just stays where it is right now, you'll see a lot of positive earnings announcements in the coming year from the gold miners because their margins are wider. They're making more per ounce of gold that they're selling, and that's more than offsetting the other inflation that they're having to deal with. And that right there is a good thing because even the big gold miners are really beaten down. They're very cheap relative to, for instance, the S&P 500 and to the underlying metal. Historically, you can chart either of those things, and the gold miners look extremely cheap right here. So it doesn't take a huge amount of good news when something is that unloved to give it a pop. And that's what's happening with the big miners right now, almost for sure. And then the little guys, like you said, there's a whole bunch of double-digit percentage gainers out there, and some of them more than just 10%, up into 20% range. And part of that is the knock-on effects of extra cash flow for the big miners, because you give them extra money, and what are they going to do? They're going to go out and buy a bunch of little guys. So that means there's more M&A potential in a $2,100 an ounce world for gold. And a lot of these little guys have just been producing bad news after bad news report, and they're so beaten down. They're trading at like bankruptcy risk levels. And if gold goes up nicely and stays up, that dramatically decreases the existential risk that a lot of these guys seem to be suffering from right now. And the pop from bankrupt to not bankrupt can be big. That can be a doubling just right there, where you go, where something is brutally hated and it just goes to not hated anymore. You could double or triple with some of these stocks. And so I think we're seeing some of that too, is that it's a big relief rally, like, oh, we're not going bankrupt after all. And you're seeing that across the explorer spectrum for sure. And some of the ones that you and I have been talking about and watching for a while are among the ones that are really popping, like Lion One. They had a brutal financing. It was really dilutive just lately, but now they're popping today, and in part because they announced some good operating stuff, and they found another copper deposit apparently, which is good. And in part, I think it's because of the broader thing. So you combine pretty good operating results with an environment where everybody's relieved that these companies aren't going bankrupt, and you get this kind of a pop. So I think there's a lot of junior miners that are benefiting from this right now, and explorers. And there's no reason to think that it shouldn't continue if gold stays up here, because the stocks that are popping now are probably not being watched by anybody. So there's just this tiny group of people that decide to buy it today because nobody else is watching it. But now, something like Lion One, say it stays up around 20% today, or a Loro, which is way up too. Now they're going to show up on screens of biggest movers for the day. And, if they have another good week in today's vein, then they're going to be up for the year. And so all of a sudden, you get a lot of technical reasons to buy them. And you get a lot of people coming in who are just looking at the chart So that's the kind of thing that could easily happen if gold stays strong for a lot of these little miners that are so beaten up. So I don't want to jinx it, but that's one way that this could go just because it's been so bad for so long.
Yeah, John, I think you raised an interesting point there about just the awareness factor in the market. I mean, for the fact that gold made a new all-time high on Friday, I didn't see any press coverage over the weekend about that. And even today, it's off to the races again. We may see a little bit, but I think a lot of generalist investors are so tied up in all the other sectors that are breaking out to new all-time highs. So whether it's the weighted stock indexes, the AI stocks, Nvidia getting a $2 trillion market cap, Bitcoin and the cryptos and Ethereum ripping higher, the crypto miners ripping higher. There's so much going on right now that it's possible a lot of generalists don't even realize there's a breakout in gold or that the precious metals equities have had a pretty nice pop. We'll have to see some follow through. But what do you make of this rally in lieu of the fact that it seems like almost everything's rallying?
Well, I mean, that could be part of it too. It's just there's so much money flowing into the system and chasing so many things that gold is getting swept up in it. So that's possible. But if you look at gold's chart, even now, what it says is this is a safe asset. It's not doing crazy stuff, but its tendency is up over long periods of time and recently. So it's a thing that protects you. But protection is not sexy in raging bull markets in other asset classes. If you've got Bitcoin going from in the 20s, 20,000, 25,000 range to 60 some thousand. And you got Nvidia adding an entire new Tesla in market cap in just the last few months. So when you got something like that going on, it's hard to look at, gold adding a couple of $100 an ounce and getting excited. I mean, you and I get excited because we've been waiting for so long for it to happen. But people whose main reality is AI stocks and cryptos, they're not going to get all that excited about precious metals, and they're certainly not going to pull money out of Bitcoin and Nvidia and jump into gold just yet, because they're still riding the wave in both of those asset classes. But bubbles tend to help non-bubbles because they generate so many capital gains. People take some money in Nvidia or take some profits in Nvidia and they've got to do something with it. And they start looking around for what's undervalued. And then some money flows into things like gold and silver, which are demonstrably cheap. So it does help. It's just not a stampede while Nvidia and cryptos in general are still going up. But those bubbles will pop at some point. Obviously, Bitcoin has had a roller coaster ride. There's no reason to think that the roller coaster ride won't stop. It's just where does it roll over? It could be higher from here or it could be around here. And tech stocks are now as overvalued relative to earnings or as richly valued relative to earnings as they were in 1999, right before the biggest equities bust of our lifetimes. So we could easily see those bubbles burst pretty soon. And when they do, some of the money that flows out will all of a sudden be a lot more amenable to the idea of safety. So it could easily be that the money starts flowing out of the bubble markets and into gold and silver. And, the way history has rolled in the past 30 or 40 or 50, really going back all the way to the 1970s, gold and silver eventually become bubbles themselves. So there's no reason, again, to think that that won't happen again, maybe on a much bigger scale. But the question is whether this is it, the beginning of it or not. You can't know that. You only know this stuff in retrospect, but it's a good environment for gold and silver. And there's no reason to think until those big bubbles pop, then we have to see what happens, that it won't stay a good environment for gold and silver. So, it feels like the next few months, at least, ought to be a time where good news for the main asset, which is gold, percolates down to the assets that are in this space, like the mining stocks and silver and the silver miners. And so no reason to think why that couldn't happen. So here's hoping, and I hope I don't jinx it by saying this, but it feels like we should be seeing good news from the miners, at least going forward. And that should help their share prices. So it could be that 2 weeks ago was the bottom for the gold and silver miners, and maybe good times are coming, or better times at least.
maybe we are going to see better times and it's going to last a little while this time. What we have seen in the past is little blips that were shortly reversed. But I'm curious, let's just go with the supposition that this is a breakout in the precious metals and that silver and gold and possibly the equities will finally get on the move. If that's the case, how are you positioning in your own portfolio right now? Are you positioned with the producers that usually catch the bid first? Are you looking at optionality in the development stage companies that have all these ounces in the ground that aren't getting valued correctly? Are you looking at explorers that may finally get rewarded for good news? How are you allocating things in your own portfolio?
Well, in my portfolio now, I've been at this for such a long time. It's been such a long time since the last gold bull market. I pretty much have everything. So you can't use me as an example of the best way to approach this market because I've just been just buying and buying and buying, waiting for this what's happening now to finally happen. But I think there's two ways of looking at this. Normally, when a bull market gets going, the outside money, the generalist money, flows into the big names. So you would expect the Newmonts and the Agnico Eagles to get a lot of new money flowing into them, and that they should do really well. But what we're seeing in the junior miners and the explorers and the developers right now is that there was apparently a lot of money waiting to jump in when a little bit of good news started happening. So it could be that we see the lottery tickets really take off this time just because they're so cheap. They can make massive percentage gains and still be cheaper than they were 2 years ago. So I really don't know. I think if we're in a legit gold and silver bull market, that it's almost hard to go wrong in terms of categories because anything that you own in this space will see a lot of generalist money coming in, which will bid it way up. So let me say this as a general statement that might or might not outperform pretty much any other approach to precious metals right now. But I still think, regardless of what we think of the next 6 months or the next 2 years or whatever, that highest quality is owning them is a good way to sleep well at night because anything else is going to be super volatile. And I think the royalty companies remain the best business model. So a nice selection of royalty companies right now would be, a fairly peaceful portfolio, relatively speaking, but would still make you a lot of money. And there are some little royalty companies that are more cheaply valued than the big royalty companies in terms of price to asset value. And so if you want to be aggressive, you could buy some of those and there'd be a good chance that they get bought out in the not too distant future. So I would say, if you're really conversant in precious metals, then buy whatever individual companies that you're most comfortable with. But if you're kind of new to the sector, start with the royalty companies, with the big solid royalty companies like Wheaton and Royal Gold. Oh, and Franco-Nevada has always been considered the biggest and most solid of the royalty companies, but they're going to report earnings in a day or two. And they've got to talk about their Cobre Panama situation, which may or may not be good news. So we'll have to see about that one. But then, after you've got a pretty good exposure to the big royalty companies, then look at the smaller ones. And then with what you've got left over, just go for high quality in whatever sector you're most comfortable with in the precious metal space. If you want to buy some big miners, do it. If you want to buy some small producers, there's some super high quality producers, and there's some very high quality explorers. But stay with quality. So make sure that whatever you buy is something that's reporting really good operational news. And so its stock might not be quite as beaten down as one that's been reporting mediocre to bad operating news, but it's still probably beaten down. You still probably have a 3 to 5 bagger if you're buying something like I-80 Gold that it's a really high quality explorer. It's developing, so it's going to become a producer here pretty soon. Something like that is still really cheap. So you don't have to take big operating chances when you look at smaller miners and the explorers. You can buy really quality companies that are doing a great job of building whatever it is they're building and that are probably going to be okay. I would say stick with quality regardless, and then go with whatever sector you think is most comfortable for you.
All right, John, we'll wrap it up there, but some good thoughts there on sticking with quality, whether it's in the royalty companies, the producers, the developers, or explorers, picking the names that have solid news results that are getting value creation by the work the company is doing. And like you say, you sleep a little better at night knowing you've got some of the best, and most of them, to your point, are still on the clearance rack. They're still on sale compared to where they would be valued historically at these metals prices. So the good news for investors listening in is they haven't really missed this move if it's a move that's going to last for a while. And there's definitely some opportunity for some of the best companies in the space to re-rate higher, along with some of the more speculative names. If people like getting John's thoughts, definitely click on the link below. It takes you over to a Substack page where he shares with you what is in his portfolio and what he is doing as far as tracking different sectors in the resource space, as well as larger themed ideas on the macroeconomics and geopolitical narratives that are running through the markets and how that affects all of our investing. So, John, always great having you on the show. Always great getting your insights and looking forward to our next chat.
Great. Thanks, Chad. See ya.